What's up, guys? Welcome again. It's Bobby and Jeremy from Growth View Properties. And today we wanted to talk to you about a pretty important topic. And what we're going to be covering today is whether or not you should use a mortgage broker or you should go direct to lender. There's a lot of approaches which you could take here, but wanted to give Jeremy, our underwriter, a chance to give you his perspective and professional opinion. So, Jeremy, man, glad we could link up.
Yeah, absolutely. It's a great topic to talk about, and it's just a personal preference, I think, at the end of the day, but ready to kind of jump in and see what specifics you have and what we can discover.
Great. Well, awesome. So let's just start from the top. And if you can tell me a little bit about what the differences are between a mortgage broker and a lender, that would be a great place to kick it off.
Yeah, so my background, for those who don't know, I'm in lending. I've been a lender for a few years, commercial, mostly large ground up development. I'm a direct lender. I lend directly to the borrower. Sometimes we use an intermediary between the lender and the borrower, as called a mortgage broker. Think of it as a property broker, but instead of finding properties, they find financing, they find debt for their borrowers. So those are kind of the two distinctions between them.
Awesome. Well, cool. And are there maybe certain pros, and we'll go into the cons afterward potentially, but let's talk about the pros and just differences between the actual brokers and the lenders from your perspective.
Yeah, definitely. So it's always good as a borrower, if you're going to buy a property, to know who you're getting into and talking with. Always ask about the fees that you're going to be paying up front. A broker, just like a lender, everyone gets compensated in the deal. It's how the world goes around. A lender typically will have a fee. A lender that you're talking to directly will, just be just that. They're lending from their abilities to lend, whereas a broker usually goes and shops your deal to dozens, if not upwards of 100 different lenders, depending on your needs. A broker has a fee on top of the lender's fee, but the pro of using a broker would be they have the ability to find you more different lenders at the end of the day, more lenders, more options. That's their job. That's what they do day in and day out. So at the end of the day, the fee should be worth the what they're bringing in. If it's 1% or 2%, but the pros of a lender is that you might be saving a percent or so by going around and not using a mortgage broker.
Got it. So you may actually spend a little more time hunting lenders and save on fees, but with a broker, you have the convenience of kind of getting a quick swoop, bird's eye view of just what's available.
Yeah, definitely. Another big pro for the broker is that time. If there's so many moving pieces. I've gone direct to lenders, and it's just such a time suck at the end of the day that if I used a mortgage broker, I would have saved all that time and maybe look at some more deals.
Gotcha. Yeah, and that's for investors out there, that's something you can put into your numbers, the time you're saving, weigh those pros and cons, and better allocate your time to more fruitful things. So that's good to
Mhm.
know. And another question about lenders, like, is there long term potentially like a benefit of just going directly to lender? Like, is there any trust or due to past results, like in having skin in the game and already maybe having done deals, that if you just go directly to a lender, you may get better terms than the average person that goes directly to lender?
It depends on volume, depends on how much business you're bringing that lender. If they're a bank, if they're a bridge lender, private money, there's all different capacities from where money originates. But if you are consistently building a relationship with one single lender, I'd say yes. At the end of the day, you have a balance sheet, you might keep some deposits with them. Banks love that. It shows that you have strength and trust in a long-term relationship. It's not just a transactional type of environment. I think in the long run, it pays dividends to be faithful to one lender if you have the ability to do so, and it's a mutual benefit.
Awesome. Got it. Okay. Well, let's talk a little bit about maybe the cons of both, just independently. Are there any just downsides or just considerations, whether it be using a broker or a lender?
Yeah, definitely. I mean, kind of as we discussed on the flip side to each, that's the time that you're going to be using if you're going direct to lenders. The amount of lenders you have on your list just likely isn't going to be as long as a mortgage broker's. It shouldn't be because that's not your core focus. You're doing all these other things, and to go and find lenders takes time. You got to talk the talk, walk the walk. And as an underwriter, sure, you might have your projections, but there's sometimes different projections that the bank wants to see it in a specific way, whether it's lending like from their bridge program or from agency Freddie Fannie. Each lender looks at things a little bit differently. So the time going to lenders, I would say, is the biggest con. And then beyond the fee with the brokers, sometimes you could kind of be misled, I guess. At the end of the day, a broker is pretty eager to get you the best terms. That's their role in this environment. But it's important to keep in mind the environment that we're in today. And although terms and rates are great, it's just always better to assume conservatively. And when you get to the closing table and finally get something under contract and getting ready to close, that things could change up until the final hour. So just being cognizant of that and making sure that you have some wiggle room in the terms from how you've projected things from the beginning.
Gotcha. And let's say like me is like someone who's not, savvy in terms of, negotiating with lenders or, have the experience of a broker. Is it possible that even though with lenders it costs more time, there's like a risk for someone who goes directly to a lender and they're maybe not as good at negotiating or understanding the deal? So therefore, due to a lack of experience, you maybe do not get as good of terms?
Yeah, yeah. Again, the broker is talking to these lenders every day, all day, and they can get related on exactly how these lenders are looking at tasks just because of the repetition and their core focus.
Right.
So I would agree that at the end of the day, you should be able to obtain more leverage from a good mortgage broker.
Good deal. Okay. Now, I know
Yeah.
you touched a little bit on there's a slight fee for mortgage brokers versus lenders, but obviously, is that fee worth, saving time? So could you maybe break down what the fees are in terms of, percentage points, bips, or just however that's articulated?
Yeah. So typically, I think market rate today has been 1% of the purchase price, or um, it could be of the loan amount. Typically, more common is the loan amount. So if you're looking at a mortgage broker who's paying, who's charging 2%, you should figure out why. If there's extra value add services that are being tied into that, there's a whole nother component of the capital stack, which is the equity. Not to talk about that today, but sometimes, they have a separate arm where they go and source equity as well. But for debt, typically it's 1%, and you should be getting some pretty competitive soft quotes directly from the lenders.
Got it. Cool. That's good. Um, and now, we're speaking in a sense of commercial real estate investing, helping, new syndicators or people who are LPs understand like how certain functions of this business works. But can you break down a little bit like the differences between maybe how residential brokers or lenders work versus commercial? Because from what I understand, with my limited knowledge, is commercial deals are not 100% based on just purely credit score the way residential is. Is that correct?
Yeah, definitely a big difference between residential and type of the properties that we look at, mid to larger size commercial multifamily. Um, to get into the specifics, a lot of the commercial lending is non-recourse, not all, but a good majority will be, and it's called asset-based lending, where the lender is looking primarily at the asset. I'm not going to say they disregard the borrower. The borrower should have experience. They should know what they're doing in order for a lender to get comfortable with the borrower or the sponsor. It's just helpful to have that track record and look, some money in the bank. Because at the end of the day, if something goes wrong, they like to see, usually a good rule of thumb is 10% liquidity, 10% of the loan, and upwards of 100% of the loan balance in net worth. So those are just
Great.
kind of, quick and dirty, high level rules of thumb.
Got it. Yes. Because with residential, it's based on what's your income been the last 2 years versus commercial. It is an income generating asset. So they want to see, like you said, do you have a track record? Does this look like a good deal on paper? Is your underwriter doing a good job like you're doing?
Yeah.
And then does the debt make sense? And can you service this debt? And, assuming
hmm
something unexpected happens, can you continue to service that debt?
Yeah, exactly. And, going back to different covenants that banks look at, debt service coverage ratio, DSCR, debt yield, just how healthy is the business and the property today, and how are you going to reposition it to continue to increase that net operating income?
Beautiful. Well, this is great, man. This is some good information. Are there any other, key snippets or secrets, would you say, either to a new syndicator, what they should understand in terms of working with broker or lenders, but also from the LP side, that's just good to understand if there was maybe a final power tip you would want to share?
Yeah, I think starting off, definitely find yourself a good mortgage broker. There's plenty out there. There, just like anything else, there are not so great ones and there are amazing ones. Make sure that you're having, interviews with 2 to 3 mortgage brokers at least to figure out who's specializes in the asset class that your group targets, because that's usually a specialty up front. Those who do it all sometimes tend to get a little bit, diluted with expertise in a specific lane. So I would say those 2 points: just make sure you're interviewing a few, and then make sure that they have specialization and a good track record at the end of the day with what your team is focusing on.
Great. Well, awesome, Jeremy. I appreciate the time, man. If people wanted to connect with you or reach out and speak more, what's the best way to reach you?
Definitely. So email is pretty good. I'm always responsive. Jeremy at thegrowthview.com. Our website has been active. Bobby's been doing a great job over here keeping that content going, and it's just thegrowthview.com. Always love to connect with new investors, seasoned investors, or just people who are interested and passionate about this space.
Awesome. Well, we appreciate you taking some time and just breaking down a little bit about brokers and lenders, Jeremy. So we'll have to do this again soon. Thanks.
Absolutely. Thank you, Bobby. Appreciate it.
All right.